the price action, it's at least in the mid 20s, and it's a decent number. We do okay at this price. We're not making scads of money, as some of the gold players are. The margins on gold right now are much better than the margins on silver. Silver is a very paper-driven price, very affected by paper. The silver paper market trades approximately 1 billion ounces a day. And you think about that for a second, because the mining sector produces 850 million ounces a year, and we're trading a billion a day in paper. So
the price of silver went down to the lowest point in 7 weeks on August 11. The regular price of silver went up just a tiny bit, by 0.1%, and reached $22.60 for each ounce. At the same time, the price of silver for future delivery in the U.S., known as Comex silver futures, went down by 0.4% to $22.99. Keith Neumeyer, CEO of First Majestic Silver, said that the current price of silver, which is around $25 per ounce, is not very profitable for his company compared to the gold market. The decline in the price of silver was caused by the rise in the value of the U.S. dollar and the interest rates on U.S. government bonds. These factors were influenced by recent economic data. In 2022, the world made about 26,000 tons of silver. This amount has stayed about the same for a while. People have been digging up and using silver for a very long time. The top 3 countries that made the most silver in 2021 were Mexico, China, and Peru. Mexico made around 196.7 million ounces, China made about 112.9 million ounces, and Peru made around 107.9 million ounces. Neumeyer says silver production hasn't changed much in 10 years, won't likely increase much even if mines reopen. It's unclear where extra silver could come from, with large ETF and government holdings. It's puzzling. Now, let's watch excerpts from Keith Neumeyer's interview. Before getting into the video, please remember to subscribe to our channel and give this video a thumbs up.
Well, looking at the numbers, which quite honestly, I'm not a big fan of the numbers because I think they're all made up. But we know what production is, and production's basically flatlined. For the last 10 years, it's fluctuated between COVID year 2020 about 780 million to a peak of about 880 million in 2016. Last year, we're about 830 million, I think, from memory. So, call it 850 million ounces of silver that the mining sector has produced, pretty well flatline for the last decade. And that's, I don't see that increasing dramatically. Even if Escobal or comes back online, that's only 20 million ounces. And, what asset out there, what mine out there is going to add significant metal? I don't know of any big zinc mines or copper mines that are coming online, with any silver, nor even gold mines. The ones that are coming online in Ontario over the next couple of years, they don't have any silver. So I'm curious where the silver is going to come from. And based on the numbers that we know, 1.2 billion ounces of silver was consumed last year. And the estimate is somewhere around 1.4 billion of consumed this year. Those are pretty significant deficits. And where the heck this silver is coming from, I have no clue, because I can't see it anywhere. We've got the big hoards in the ETFs, but outside of that, of course, there's the governments. The Russians probably own some silver. I'm sure the Chinese or the Indians, they also own silver. So whether they're supplying it to the market, no one knows. I'm quite critical of the Silver Institute, and First Majestic is not a member of the Silver Institute because of the fact I think they do an incredibly poor job in selling silver and selling what silver is. Silver is a strategic metal. I don't look at silver as a precious metal. I know it's precious, of course, and I'm not saying it's not precious. I just don't look at it. And when I think of precious, I think of currency. I think of gold as currency, as a granddaddy of currency. And I look at silver as a strategic metal, a metal that we need to do a call like this, whatever it may be, whether it's EVs or solar panels or or whatever the case may be, computers, all the electronics, pretty well everything we do on a daily basis requires silver. And but the Silver Institute focuses on jewelry, which is like who cares about jewelry? It's not a growing business. It's about 15-20% of the market, and it's been that way forever. The growth is in the electronic side of things, the EVs and so on. And so anyways, I'm super bullish on the metal, but the US government just came out with a list of the top 50 strategic metals. I think it was about 2 or 3 months ago. I'm not sure if you saw it, but silver was not on that list. And I said, "Well, WTF? Like, why would silver not be on that list?" And there was metals on that list that I'd never even heard of. They're in the periodic table, of course, but metals that most people wouldn't even know what they are. So I was so of course the Silver Institute saw that, and it's embarrassing for them that the silver didn't show up on this critical list, because it should be there. And as long as there's not a view, as long as people on the street that continually look at silver as a poor man's gold, I think that silver is going to struggle, and we just need that to change. But we need more people to talk about it, or we're going to have a supply crunch where the Teslas of the world just simply have to stop production because they can't get silver.
Neumeyer emphasizes that if silver was $100, as he thinks it should be, more would invest in mining. Now, lots of silver, but mining isn't worth it at $25. Need higher prices for silver sector to grow. In 2005, people dug up almost 20,000 tons of silver from mines. Another 5,825 tons came from recycling old silver stuff. So, the total was about 28,363 tons. Out of this, 26,885 tons were used for things like making jewelry, coins, and stuff in electronics. During the 1900s, new mining techniques contributed to a massive rise in overall silver production. Let's watch Keith Neumeyer's interview with SOAR Financially.
Other than the metal that's in transport, there's about 400,000 ounces of silver currently sitting on the floors of a variety of mints and in transport from the mines, but which of course is in our inventory, but it's technically not being held back. It's just in transport. It's a really exciting part of our business. It's something we've been doing for over a decade now. I think 13 or 14 years. And we did it, just basically at the request of our investors, wanting to have physical products, and it turned into this, profit center, within the business. We don't make a huge amount of money, but it's nice to have a small profit center that is satisfying a need in the marketplace. But it's frustrating because the bottleneck is the mints. In the United States or North America, the refining capacity is pretty good. There is room for additional metal, to silver and gold I'm referring to get into the refining system and get refined into final, 999 product. But where it stops, and these are commercial bars I'm referring to, but where it stops is the mint. The mints don't expand. They're reluctant to expand. They've been bitten in the butt, in previous cycles where they have expanded, and some of them have gone bankrupt. We've lost in Northwest Territory Mint a couple of years ago. Then we lost Republic Mint also a couple of years ago. These are two big U.S.-based mints. I think Republic, I think, was the largest mint in the United States, and they're gone. And because they expanded too quickly, and then the market turned on them, and they couldn't finance the business. And so these mints, if we could solve that issue, we could double or triple our sales, I think, quite easily. But we have metal sitting at the mints right now, waiting for delivery, waiting for production, and we have to wait months and months to get our product, in order to resell it. Looking at drilling results, looking at financial statements, looking at production numbers, so we do a lot just watching what's happening in the marketplace. And it is a very tough market. The silver industry, like, we could load ourselves up, as we proved at Jerritt Canyon. We could go buy a bunch of gold mines, But buying silver mines is a very difficult thing to do, and it goes to that ratio, 7 to 1. And I don't think investors really understand the rarity of silver, and that's what bothers me a lot or confuses me at the same time. Where the metal's trading. If we had $100 silver, where I think silver should be trading at today, then we would have more investment into the silver sector. And because there are a lot, you know yourself, Kai, there's lots of metal out there. There's lots of silver out there, but it comes down to economics. At $25 silver, it doesn't pay to get it out of the ground. Because if you've got 50-gram ore body, that's what $45 we're in value on a ton of ore, but it's going to cost you probably north of 100 to process it, maybe 200 to process, depending on what country it is located around the world. So that means you've got to have metal prices at least 2 to 4 times where the current metal prices are trading, just to bring some of this additional silver online.
The decline in the price of silver could have a negative impact on the silver mining industry, as it could make it more difficult for mines to operate profitably. The future price of silver is uncertain, but some experts believe that it could rebound in the future due to factors such as rising demand from industrial users and investors. Considering historical trends and Neumeyer's observations, how do you see the future of silver and its various applications unfolding? That's all from us. If you liked this video, please like, share, and subscribe to our channel and click the bell icon to be notified when we release new videos. Currently, 93% of our viewers have not subscribed to our channel. Our next goal is to reach 2,000 subscribers. Please consider subscribing to our channel and helping us reach our target.